Would you like a simple technique to easily average more than $1,000 in monthly cash income? In this video, we'll teach you just that while outlining how to handle the inevitable challenging situations when the trade goes against you. I'm Seth Freiberg, and we are one of the top proprietary trading firms in the world with numerous 7 and even 8-figure per year traders. You found the right place to learn. Traders on our desk, as well as retail traders all over the world, really, contact us pretty consistently as to our advice on the best ways to produce monthly cash flow to supplement their current income, or in some cases to literally replace their income and trade for a living. The purpose of this video is to share with you the concept of a campaign of cash secured puts, which, if executed correctly, can produce very consistent and very considerable amounts of monthly cash income, which you can then withdraw and use to supplement your income on a monthly basis. Now, if you're absolutely brand new to options trading and you don't know much of anything about options and how they work, we've actually created a video for you to understand options basics. And if you click the video appearing on your screen right now, it will lay the groundwork for your understanding the cash secured put strategy that we're going to be teaching you in this video. Then when you're finished, you can just come back and watch the video. Okay, so let's get started by looking at a big picture point that's often missed, and that's simply this. This is a chart of the SPY since the beginning of this century. And as you can easily see, the SPY over time goes up, and in fact, it goes up a lot. And while of course it occasionally pulls back, those pullbacks come to an end, in some cases very quickly, and then simply keeps climbing. And that's because the world economy has a tendency long-term to grow. And since the SPY is an ETF that represents the S&P 500, it's pretty logical to assume that if the world economy over time keeps growing, that the SPY will keep getting more and more valuable over time as well. And that's an important backdrop for what we're going to be covering in today's video, because I'd like you to just keep in the back of your mind that ownership of SPY stock has proven to be a pretty good thing over the long run. And crucially, SPY has never failed to eventually take out its own all-time highs ultimately. Okay, so let's say that we had a goal of making on average at least $1,000 extra cash income every month. Well, then let's head back a year to November 1st, 2022. And as you can see, the SPY had come off its mid-October lows and was trading at 384.52 at the close on this first day of November. And so let's say we pulled up an options chain expiring about a month later on December 2nd, and we went ahead and sold 3 SPY put options expiring a month later at the 375 strike, which is approximately 2% below the price that the SPY closed that day, up at 384.54. Now, from a cash flow standpoint, the way this works is that we sold 3 of those puts for $670. But remember, each put represents the obligation to buy 100 shares of SPY stock at $375 per share if the stock closed below $375 on the day the options expire. So you multiply the $670 by 100, and we sold 3 of them. So multiplying it all together, the first puts we sold as part of our program brought in $2,010. Okay, so now let's move to the day those puts expired. And as you can see, the SPY closed at 406.91, which is far above the strike price of those 3 puts at 375. And so those expire worthless. And the trader simply gets to pocket that $2,010 that he originally collected for selling those puts in the first place. So let's start keeping score. And to do that, we've created a chart for this purpose. And with the first trade close, we can see with the SPY closing at 406.91, that would cause the puts to expire with no value, because the right for an owner of SPY shares to sell his shares at 375 when they're trading in the open market for 406.91 is obviously 0. And so those puts expire and we just pocket the $2,010 that we initially collected. Okay, so now let's continue the campaign. And so 2% below the current SPY price of 406.91 is about 400. And so we pull up an options chain expiring about a month later on January 6th, 2023 now. And we go ahead and sell this time 3 of the 400 puts, which we're selling for a bit less, around 644 this time. And so that results in our collecting a little bit less, $1,932 in this case. Okay, now something interesting happens on January 6th, and that is that the market closed at 388.08, which is obviously below our short puts at 400. And so what happens at this point is that we are required to buy the 300 shares of SPY at 400. And so now we own SPY shares. And so what do we do now? Because the goal of this exercise was not actually to own shares of SPY, rather we're trying to earn cash income each month. Well, before we cover how to handle these trades when we were assigned the shares through fulfilling the terms of the 3 puts that we sold, let's update our scorecard. And we're doing this because it's important for you to remember that even though we now own those 300 shares of SPY, we still collected $1,932 from selling those 3 puts, and we get to keep that cash just like we did when the puts expired worthless the previous month. Okay, so now getting back to that question of what we do when we now own the shares, which again was not our goal, the answer is that in the next month, for the options that expire in February, instead of selling 3 puts 2% below the market like we've done the last couple months, instead we go ahead and sell 3 calls, but this time right at the same strike that we were just assigned those shares. And again, the options are expiring a month from now, but this time they are call options, and you'll see very shortly why we did this. Now, the calls also bring in cash, just like the puts did, and so the price of $479 per call option, that brings in $1,437 for those 3 calls at that 400 strike price expiring on February 10th. Okay, so now let's move to February 10th. And as you can see, the SPY rallied back and ended up closing at 408.04, which is above where the short calls are located at 400. And so what that means is that the one we sold the calls to are obviously going to exercise their right to buy the SPY shares at 400 when they're trading at 408.04 in the open market, because they can resell them immediately and make a profit immediately. And so what that means is that a month later, the shares that we were required because of our put obligations to buy at 400, those very same shares were sold to the call buyer for $400 a share exactly, meaning that we neither experienced a realized gain nor a realized loss on those shares. We just broke even on the shares, and they are no longer in our account. So let's now update our scorecard. And as you can see, we simply collect the call premium, the $14.37 we sold, the 400 strike price calls for, and we just go ahead and add that to our cash that we've been collecting during this campaign. And once those shares are gone, then we just go ahead and resume the put selling campaign by, in this case, selling the puts that are about 2% below the SPY price, which in this case, coincidentally, happens to be the 400 puts again, for which we collect, in this case, a price of $5.14, resulting in $1,542 in cash flow. And so moving forward to March 10th, as you can see, SPY closed at 385.91, resulting in the shares again being assigned at $400 per share. First, we're going to update our scorecard again, and we'll add to our cash the $15.42 from the 400 puts expiring in March. Remember, we still hold on to that, but we'll note that once again, the 300 shares were assigned to us. And so as you can expect, when we move into the next phase of our campaign, we're going to again sell the 400 calls in order to make more cash and set up the potential for the shares to be called away again. Because remember, our goal is not to own SPY, but to collect cash each month. And so we want to dispose of those shares as quickly as possible. And so we move into the April options chain and go ahead and again sell the 400 calls for, in this case, $2.79, which brings in $8.37. And when we move ahead to April 10th, it's deja vu all over again, and the SPY rallies yet again, closing at 409.19, which therefore results in the shares being again called away at the exact same price that we originally were required to buy them under our put obligations, that $400 per share, resulting in us again having no shares and just pocketing that call premium, as you can see from the updated scorecard. And so therefore, we're now free to sell 3 puts, again, 2% below the market, which we went ahead and did. And as a pretty remarkable coincidence, this time we again sold the 400 put, resulting in cash this time of $1,263. Okay, so at this point, I think you get the idea. And so with the SPY and more or less of an uptrend for the next several months, meaning each of our cash secured puts expired worthless in each of those months, we're just going to go ahead and update our scorecard with the May, June, July, and August puts all expiring worthless as the market closed well above the short puts in each of those months. And we just kept collecting the cash. Okay, now in September, with the index trading at 443.37, it was time for us to put on our October trade, entering the 435 put position for 270, which brought in $810. But when we got to the expiration date of those puts on October 13th, the shares had actually dropped below our 435 put strike price, closing at 431.52 on expiration day, resulting in us again being assigned those 300 shares, this time at a price of $435 per share. So updating our scorecard, we again take our cash income in for the October put position, but at the same time we are assigned the 300 shares, at this time $435 a share. So as I'm sure you know by now, for our final trade of the campaign, we'll be selling the 435 calls for November, which as you can see, were sold at a price of $779, which brought in $2,337. And so finally, completing the full year, we can see that SPY rallied back up over 450, closing at 450.79 on November 17th, way above the 435 strike price of the calls, thus resulting in the shares getting called away at 435, meaning neither a gain nor a loss on those shares. Instead, we just collected, as we did in the past, the $2,337 for selling those calls, which we just add to our scorecard, bringing the total for the entire campaign to $15,771, which comes out to over $1,300 per month on average, so we met our goal. And so what I'd like you to take away from today's video is that there is absolutely a way to generate cash income from your trading account through a disciplined cash secured put program. There will, of course, be times when the market will sell off and you will be assigned the shares, as happened multiple times in this campaign, but we were able to just turn around and sell calls against the shares we were assigned in order to continue to glean income from the campaign while we were long the shares. And even if the market sells off hard and we are assigned the shares and they don't come back for a while, we're talking about SPY, shares of SPY here. Remember, the stock that always historically has eventually taken out its all-time highs every single time. Incidentally, this alternating between selling puts and selling calls against assigned shares is known as the wheel strategy, and it's essentially a way of always earning income from a cash secured put program, even when the income isn't actually gleaned from the short puts themselves, but instead from the short calls you're selling against those shares assigned. The wheel strategy is essential to a successful cash secured puts program because it means you'll continue to earn cash income during those periods where you own the shares on top of that dividend that the SPY pays quarterly. Professional traders understand strategies like the wheel for cash generation and use them to their advantage. And now you've got that knowledge too.
Now, if you'd like to learn 3 more option strategies that our pro traders use, including the unique options trick that allows you to make money while you wait to buy stocks or ETFs at the price you want, and the options income strategy that allows you to make consistent money whether the market goes up or down or sideways, and how to make money on a stock or index trade even if you're wrong on the direction, then click the link that's appearing right now at the top right-hand corner of your screen. That will open up the free workshop registration page in a new window. So don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com.